Good evening. This is the Elliott wave update for the S&P 500 for Thursday, September 21st, 2021. Well, as I was trying to put the finishing touches on how I wanted to label the chart for today, out came the news on Snapchat's earnings. Now, Snapchat closed at $75. It dropped to $52 and is having a lot of trouble getting itself back up off the floor. Seems that they had very disappointing earnings and then guided lower for the next quarter and blamed it all on Apple, which I'm finding very amusing. But let me just go into this a little bit. It seems that Apple does not, or purposely will not allow Snapchat, Facebook, and other social media apps to steal information from their customers, from their customers of Apple. And so this is how, when Facebook and Snapchat and Pinterest and all the rest of them were basically, they were putting it together in the way that this is how they then collect the data on what you're looking at, where you're going, what you're viewing, and what your shopping habits, et cetera, so they could force garbage to your Snapchat or wherever channel. In any case, the result has been a total turnaround in the futures markets. And with Snapchat dropping, Facebook right now in the after hours is down 20 from the close at 341, trading at 320. Google actually applauded that, and Google is on the rise. Amazon is down 23. And it just goes on and on from there. So if you remember what I was been discussing all along, that I didn't really understand or know why or what would create a market to go down, particularly our markets right now. That this bullishness that we've been seeing has been unending, has been without pause, has been daily. And as we saw today, going into the close, the S&P got up to 45.43, came within $6 of reaching the all-time high. And I had just changed it and moved the 3 up to here, which I still will leave there because it does fit in the count. Put the 4, and now we were in a wave 1 of 5. Now, that may be the case, and it may have ended right there. And this is a wave 2. Yet to be seen. So I'm not necessarily going to change the count, but I said it's going to get interesting from here on out. So how I need to leave this is we need to be on our toes. If you're going to go in and trade the S&P, that they may still try to buy this up. They may try to just brush off that news. Facebook reports on Monday. Facebook, I believe, is in the S&P. We know Facebook is within the NASDAQ. So this is to be continued. But we need to continue to trade what is exactly in front of us, not to be married with any particular side, because now you can see how quickly, not that we didn't before, but how quickly that picture can change from everlasting positivity to negative in the drop of an earnings report. So the future dropped, like I said, went from 43 down to, and I think the low on this one was below where it is. Let me go down at least to my hourly. Let's go down to the 15-minute, and then I can get a better correct. All right, there you go. Got down to 30, now back at 31, close to 43, so it dropped $13 real quick. Now, back out to my hourly chart, and let's take a peek. So here I was thinking 1, 2, 3, 4, 5, wave 1, or since a completed 5-wave structure, is it all a 5? Maybe. I don't know yet. This can be a wave two. As we know, second waves can actually retrace all of first waves, if not almost all of the first waves. It's a sudden jar to the market. It's a sudden reversal of fortune type stuff. But in its current position, it's wave one of 5, the 5th wave up, the final wave up. And that's got me sitting there like, maybe it is the 5. Maybe what'll have to happen is I'll need to put the 3 back down to there and the 4. So instead of being a sub-minute, it'll be the minute 3, minute 4. And then this is 4, excuse me. And then these would break it up here. So this would be 3 of 5, 4 of 5, 5 of 5, we're done. Now, I can't call that yet because we need to see so much more before that determination can be made. But I need to put all this out because I have been talking about that. I feel that what's going to kick this market down, or all of our markets down, is going to be negative earnings reports or a big negative earning report and a kick to the teeth or a cold cock punch to the face. That may have just started. And that's what I really want people to be aware of today. If you're coming in and we're trading tomorrow, we have this, all of our markets got to roll around the globe in Globex before we get them back tomorrow morning. Now, if you have the ability to trade 24/7, then you're going to be able to trade these markets as Globex continues and it moves over to the Asian markets and they take a look and see what they want to do, moves over to the European markets. We could have a very down day tomorrow. And here's what will exasperate that down day. If this market begins to break and it breaks down below the 50 right now, that's on the hourly basis, sitting at 45.14, and then starts to head down, there is nothing in here. We'll get little points here, but we got nothing really immediately, either to the upside or to the downside if it starts to break down, that should say, okay, we should go here, we'll find support here. That is over too far. So it could really pick up some steam. If it breaks that level, the next one up is the 1 hour 200 moving average. And that's at 44.55 right now. So it could get ugly. If everything turns negative, because now Facebook's going to be confronting, what are they going to talk about in their earnings report? Are they going to talk about a loss of revenue due to the fact that they can't, their advertising is not going as planned? That, I think, is why Google is going up, because that's their biggest competitor. For online advertising dollars, Google has made a strong play to grab that market and basically to try to grab it away from Facebook. So we've got a lot of things brewing amongst this intense bullishness that has pushed our markets up for, I'm going to say 2 weeks. 2 weeks yesterday. This is really where it started. On October the 7th, October the 6th, excuse me. And now here we are on October the 21st. And just pushed and pushed. So we started this, let's just take a peek. 42.74, we're going to call it. I'll round it up. And we got up to 45.43. It's amazing. It's an amazing run that we've nearly gone up 300 S&P points to get here. And as I've been saying, a hope and women of prayer, I don't know. I'm still sitting out there thinking, okay, if you guys can recover off of this, if you guys can gather your steam again, you, excuse me, you want to come in tomorrow and just keep boosting this stuff? No, I think it'll be, there's nothing we can do, and the buyers can overpower the sellers and just go. But they got a lot to overcome. So it's going to be depending on how, they're trying to step back in and buy Amazon now. And I just find it very, very interesting that how the markets really want to play these things. The S&P is now trading at 31 and they're hitting bids. And now it just dropped another 75 cents and one ticked. So they're knocking the NASDAQ way down. So again, interesting. Be on the lookout. We may have reached our top, and it came ever so close to making new all-time highs. And really all that tells me, folks, is that with the inability to do that, let's go back out to that 4-hour chart. Let me just show you what I believe. It's a total flat. Now, what we would normally think is that we're going to get a C wave down and it will take us back to 42.60. Now, I think that what's really going to come in, that would just be under the assumption that this whole thing is just all corrective and that we just resume our bullishness once it is done. And I'm thinking, no, this one up as a B wave, which is deceptive, which is full of garbage, good reason to buy it up. Well, it's fool's gold all the way up. So when you've got this much to have to change their positions, do you think it'll really be contained here? I don't know. But I do think we could get a C wave that could knock the socks off of people's P&Ls. So I believe that we need to be very close attention to what is going to happen. They're starting to buy it back up again. And that I find amazing. When you have buyers that are going to step back in because, well, they're buying Facebook. They're buying these different things, they're buying them back. Fine. Upside. It needs to continue break to a new high. Anything less, we're done, in my opinion. Our next resistance is at 45.60, then 45.90, then 46.17 where we get overlap. This is where wave 5 would equal to 50% of the length of wave 3. 618, 46.41. They still can do this, folks. They really can. Ignore all news and just go, because the rest of these companies are going to blow the doors off. Okay. By the way, they did hit Amazon as well. I'm not sure why, but they hit Amazon. I think it was because Amazon was out there bidding for something, weren't they? Some app, which I thought weird that they would be interested. But in any case, they're down 20. Amazon's down 20. Amazon's in the S&P. So we'll see. But upside, they got to go. They're at a position now where it's like, you made a new high over the 3, so we can count that as complete if we have to. And maybe you just fail. Yet to be seen. Upside, got to go. Get yourself above 49, keep on chugging. But the resistance now to complete it, should that be the case, it's all in line. And I can consider it an irregular B wave if it only gets 12 points, 11 points above that level. It's still an irregular because it made a new high. It just didn't go to the expected Fibonacci levels. If it's going to do that, well, then it's got to get itself above 70 points higher. It needs to get up to 46.17 or 46.69. All are not unrealistic, all are possible. And this wave 5 would come in at 70% of wave 3. Totally fits. 618 totally fits. Perfect Elliott, perfect Fibonacci. And this is what I was putting together, getting ready to make the update. And then I look over and it's like, what are they doing? And then they're crushing a couple of stocks. I'm like, well, that kind of takes the wind out of this sail. But I'm going to present it anyway, because this is what I think we need to do. This is what I think we need to be aware of. They may just come in and ignore all of this. And they're going to buy it up anyway, because that's what they had planned. I don't know. But be prepared. Sudden reversals, sudden moves up. The volatility certainly is going to get kicked up several notches. And that would not surprise me at all. So if we're going to get high volatility going up, we're going to get high volatility coming down. And the they're lining up these buy orders, we don't care, we're going to buy it anyway. That'd be the case. Now, keep in mind, it's Friday tomorrow. Therefore, it's another expiration. Facebook is sliding through strike prices as we speak. The option traders have not been able to trade because their markets are closed. So Google is trading up through strike prices. Amazon is trading down through strike prices. And on the day of expiration, if you're sliding through strike prices, you, as the trader with positions, you must react. As a market maker in Amazon, you must react. You have no choice. So this could cause a little rift in our slow Friday expiration type days and really produce some activity for us. And that would be a good thing. Because in all honesty, I personally don't care if it goes up or down. I just want it to be volatile and preferably do both. We know how to make money no matter what direction the market picks. What we don't want to see is chop fest. Chop fest just really is very difficult to trade, particularly when you get a big, huge green bar and then a big, huge red bar and followed by a big, huge green bar. That's just very difficult because there's no follow through and it's just chop. And it can be very deadly. That's what I don't hope for. I do like volatility. I do want it to go up and down and just we'll be able to read that price action. We'll be able to follow our move. Excuse me, I'm sorry. Follow our moving averages and hopefully make money. Today was another very profitable day, and that was playing both sides. We had good sell down, we had beautiful buys, both worked. Let's hope for the best for tomorrow. So again, be on your toes. I fully, until I saw this, expected that we would move higher again tomorrow. But the way they left this market, they bought it up to the highs on the bell. Then boom, collapse. So I'm thinking, let's see what they do. If they come in as buyers in the morning, we're ready. We'll play it. We're not going to get married to a position, right? You're going to play the bars. You're going to play along. You're going to come right down to this 5-minute bar. Now, let's just say it's during our regular session. Do you think that's tradable? I do. Very tradable. This would be chop, but that tradable, follow through. And they're just, because it got oversold, they're just buying it back up. And they have to, because as these individual component stocks uptick or downtick, it changes the value of the index. So you have to participate. If you're a market maker, the computer's going to tell you what the price is. So be aware, be prepared to trade both directions. And this is where I'm going to leave it. Tomorrow should be very interesting, folks. I'm kind of excited. So I'm hoping that it's something and not just this boring, slow, nothing day. This is where I am going to leave it. Trade smart. Use your moving averages. Use the Fibonacci. Use what you have. Use the tools you have. Trust your instinct. Trust your moving. Trust your strategies. And if the market is lined up and we're looking like it's going to go up, well, until that no longer is the picture, follow it. And if it changes, reverse. All right. Have a great trading day Friday. Our next update will be on Sunday, the 24th.